Good morning, ladies and gentlemen, and welcome to the Good Energy Group PLC Pre-AGM investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged. They can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so, and these will be available via your Investor Meet Company dashboard. I would now like to hand you over to CEO Nigel Pocklington. Good morning, sir.
Good morning, and thank you very much, and a very warm welcome to our pre-AGM investor presentation. I'm Nigel, and I'm joined by Rupert Sanderson, who is our CFO. And before we get started, I should maybe just clarify and set some expectations. We're not releasing any new results today, and we won't be particularly offering any additional financial commentary to the material that's already been put into the marketplace, particularly with our preliminary results and annual report. What we are very much focused on is the upcoming AGM, a chance for shareholders to ask us any questions, particularly around a business that we're looking to transact in that meeting, and to give you a bit of a short update and reminder as to the direction the company is moving in. So I shall speak for about 10 to 15 minutes, and then we will open the meeting for questions. So by way of introduction, and those of you who've been following the company for a while will remember this, last year we began to talk about the fact that whilst our overall mission, which is to power a cleaner, greener world, hasn't changed, our vision for how we can best do that has. And the company has very much moved from its roots as an investor in smallish scale renewable generation projects into and supply into being a business built on the supply of a properly green renewable product, but increasingly importantly, energy services which help homes and businesses make the energy transition to low carbon energy, not just in their use of electricity, but also in their transportation, in their heating, which is the way in which the UK is going to be able to meet its climate goals. So we are transitioning the business to being one that achieves that mission through an investment in energy services, as opposed to our roots original business as a generator. And last year was something of a cornerstone year in that journey. So to remind everybody, why do we think that? Well, there are 4 things there listed as sort of key elements for last year. So at the very start of the year, we sold our generation asset portfolio. This is a topic which we have covered a number of times, but just to remind you of the headlines, the assets we actually owned, wind farms and solar parks, generated about 15% of the power we sell, so a minority element of the power we sell. They had considerable debt tied up against them, and frankly, since they were built, significant allocation of capital into this across the country in the billions, not millions, and so they weren't necessarily making that much of a dent in terms of our overall mission. So a better allocation of capital was to sell them, to use the money to remove the debt that was associated with them on the company's balance sheet, and redeploy that capital both to fund the extraordinary working capital needs we've seen through the energy crisis, but also in our journey to energy services. As part of that, we invested along with FleetCor in ZapMap's Series A fundraise that valued ZapMap at just over £26 million, very much reflecting its position as the leading app for electric vehicle drivers in the UK. We also acquired a heat pump installation business from the former energy supply business Igloo, and that has now given us an in-house capability to install both heat pumps and also solar and battery solutions for households. And we backed that up with the launch of new tariffs and products aimed at self-generators, be it people on the feed-in tariff scheme, which is now closed, but also new and very generous rates for exporters, provided they're also on supply with us. So that kind of key year in terms of the development of the company, and it leaves the company, the board feels, in a strong position. First of which is that we've got a strong balance sheet. If you're not from a financial background, that sort of maybe sounds like sort of glib words. What it really means there is that we have very little debt now on the balance sheet. We have a small amount of bonds, less than £5 million, which we pay an interest on, but fundamentally there is no significant debt burden on the company. In fact, we have a very substantial cash balance at the moment. We are investing some of that cash in markets which are likely to grow much faster with more sustainable levels of profitability than energy supply is alone. We can expect comfortably double-digit compound annual growth rate from the growth of electric vehicles on the UK's roads, from solar panel installation and the transition to electric heat. And in doing that, we are helping people both save money, frankly, but also to decarbonise. And we are, I think we would say, aligning the business behind that vision around energy services. So, we are providing and growing our suite of services, both to solar and sort of small-scale generators, but as I've just said, increasingly to people who want to deploy electric heating and electric transportation. And we've said publicly that we are not stopping with the acquisitions and investments that we've made, and we remain on the lookout for suitable businesses to add to our portfolio of energy services. From a customer proposition point of view, it is still underpinned by our commitment to a genuine renewable supply offer for both the business and domestic customers that we've got, but people for whom this is a sort of a real consideration in terms of their choice of energy supplier. We're one of the very few suppliers in the country who can effectively say to either a business or a domestic customer that they are reducing their carbon footprint considerably by taking power from us and supporting small-scale generation across the UK. That's one of the founding principles of the company, and it's one that hasn't changed. As the year has gone on, we'll obviously talk to shareholders more in our interim results presentation after the summer, but we are seeing good progress against this energy supply vision. That's a real photograph, I should add, including company liveried installers and vans. So we are both installing solar and heat, with a lot of marketing to our own customers, particular focus on our sort of strongest geographic base, which is really the south and southwest of England. Our supply product is benefiting from a stabilising wholesale market. You will have seen a lot of news coverage of this, and our customers, if they've not already, will be hearing about reductions in our unit rates as the wholesale market declines as well. And ZapMap continues to grow as the electric vehicle market grows, and we are seeing both a growth in its subscription product, but actually particularly a growth in its sale of data back to the electric vehicle industry. It is very much the most comprehensive and most complete source of data on electric vehicle drivers' habits, and that's fast proving to be an important part of its business case, and it is on track to hit the plan that it did the fundraise with last year. So we should turn now, for the last couple of slides, specifically to the annual general meeting, which is coming up next week, which in many ways, of course, is the closing chapter, the closing act of the 2022 financial year, because we're asking shareholders to approve the report and accounts, the remuneration of auditors, and other sort of standard pieces of corporate governance. But there is something out of the ordinary in the resolutions we put to shareholders, which is asking shareholders to support a change in the company's Articles of Association to reflect our desire to gain B Corp accreditation. So I'm sure there are varying degrees of understanding of what B Corp means, so I'll start with first principles. The B Corp movement, born in the US initially, overseen by a not-for-profit organisation called B Labs, is one which aims to set a very exacting standard for companies who are able to demonstrate that their business is both run for the bottom line, for its profitability, but also for to have a positive impact on people and the planet. So the idea of a triple bottom line. Now, many businesses, frankly, would feel that that's what they're in business for. But B Labs enables companies to get a very clear certification that is how the business is run. In many ways, given Good Energy's history and its purpose, it is looking for recognition and a legal sort of change to really reflect how the company has been run through much of its history. And that is what we are seeking in our first resolution for the annual general meeting, which is that we need shareholders' approval to reflect that concern for the triple bottom line in our Articles of Association. And it basically places an obligation on the company's directors to ensure that they are considering both people and planet, as well as profitability and returns to shareholders in their decision making. There is a lot to be said about this. We've published quite a lot of materials. We also hosted a panel event with two B Corps and a legal expert on this, which can be found on LinkedIn. So there's a lot of material with the URL given there if you'd like to know more about B Corps and what they mean and why we're applying to shareholders to change their Articles of Association. And why is it important? Well, it is a clear stamp of trust for consumers. And if you've been following our story for a while, you will know that one of the things we are vociferous campaigners about is the whole problem of greenwashing, particularly in the energy market. So too many tariffs branded as green when they aren't particularly. This is another piece of accreditation we can use to point out the difference between our genuinely green tariff package and those of other suppliers. I'm pleased to say that there has been some progress on this in the market, and I would single out OVO, who are a very large supplier, for coming out last month and saying that they were going to stop branding tariffs as green when they are not, when they're just certificate-backed tariffs, because their data showed that actually that was not a way in which you could link a customer's spend on energy to renewables. So the world is moving slowly in our direction, but the B Corp certification will help us stand out in that. It's an important employer brand. Retaining committed and dedicated workforce is a harder thing to do in this environment. Anything that helps you stand out as an employer is, I think, useful for business. It's an important community in its own right. B corporations tend to trade with each other a bit more because actually an examination of your supply chain and all the elements in that becomes important in maintaining your B Corp certification. And since we are one of the few suppliers who can demonstrably reduce a carbon footprint for a company when somebody comes on supply with us, there's a commercial opportunity for us there. And certainly the evidence, if anything, is that B corporations tend to be sort of newer, faster growth, value-driven businesses. If you look at the 3 years before the pandemic in the UK, for example, the UK's B Corps posted growth rates of around 29%, as opposed to the sort of the norm of about 5%. So they are often faster growing, newer companies with whom it would be good to align. So there is a strong business case for our getting B Corp certification, and there is an ethical case as well in that it sort of binds us as a company to our underlying purpose. And then what does that mean practically? And we've had a couple of questions about this. So we have submitted a series of resolutions to this year's annual general meeting. I would say all of them, apart from the first one, which we'll touch on in a minute, are very standard resolutions that any public company from the largest on the FTSE 100 down would submit to their shareholders. So there's sort of corporate governance here in that we have to accept the reports and accounts. We have to accept the payment of the dividend that we proposed, appoint the auditor and pay them. Directors have to stand for re-election every 3 years or so. So myself and Tim Jones, who's one of the non-executive directors, have come up as the directors needing to seek re-election. These are all market standard resolutions, which the board of directors is very clear and unanimous in recommending to shareholders that they vote in favour of. There's then a special resolution there, which is point one, which is the point we've just been talking about, which is that as we get closer to getting a B Corp certification, we would like to change the Articles of Association to reflect that triple bottom line concern. That also needs approval from shareholders. And we have, again, as a board, unanimously recommended that shareholders vote to change the articles to align with the B Corp status that we're hoping to achieve. And the deadline for votes is finally on the 20th of June, before the AGM on the 22nd. If you haven't yet voted, given the possibilities of technical slip-ups, I would advise you to vote as soon as you can. And that, frankly, is the only formal material we wanted to take investors through. So we have an annual general meeting next week. We are looking for shareholders' support, not just on the normal set of resolutions, but also on our progress to becoming a B Corp, and we're very happy to take either pre-submitted or live questions from investors who are on the call.
Nigel, Rupert, that's great, and thank you very much indeed for your presentation this morning. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab that's situated on the top right-hand corner of your screen. But just while the team take a few moments to review those questions that were submitted already, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Rupert, Nigel, as you can see, we have received a number of questions from investors. So if I may just hand back to you to respond to those where it's appropriate to do so, and then I'll pick up from you at the end. Thank you.
Will do. Right, so I've gone to the Q&A tab on the right-hand side of the screen, and I suggest we just work through those. I'll read out the questions or summarise them, and depending on the focus, Rupert and I will answer them. So the first question comes from somebody who actually is already on the energy transition journey, having got solar panels, and is looking for an update as to when we can buy surplus power being generated. So there are two things to know on that one. If you're a member of the feed-in tariff scheme, we are now rolling out our what we call smart export program, which is really a payment on actual generated power rather than a deemed or assumed amount. We launched that in beta at the end of last year. It is now up and running properly and scaling very quickly. So I would expect feed-in tariff customers, if they haven't already transitioned to that, to be contacted by us pretty soon. For customers who aren't part of that scheme but are on supply with us, we have an export product called Power for Good, which we launched in beta at the start of this year, and we are again scaling as we just sort out one or two issues with the way the sort of system works right through our software and into the grid. But we have an ambition to pay a market-leading export rate to generators. And as part of the materials for this meeting, I don't think my reading out a URL is going to be that helpful. We will once again remind you as to where you can find more information for that, but basically on goodenergy.co.uk/power for good, and you can find the information on those products. So that's the first question. Second question I'll take, and then the third I'll hand over to Rupert. The second question, it concerns 2 points, which it's regrettable we were in the news, which is around 2 recent fines imposed by Ofgem. So 2 fines. The first was for £25,000, a relatively small amount of money, frankly, compared with 2 fines of well over £1 million to 2 larger companies. And if I'm being candid, I was, somewhat aggrieved that Ofgem chose to, put our name up in lights, frankly, for a relatively small fine. The issue there was that Ofgem did not approve of the speed or process with which we had closed accounts for customers who wanted to switch away. The 3 companies who were fined, so us, Octopus, and E.ON, are all users of the Kraken system, which Octopus themselves developed. And the process that was following was that we would wait to true up an actual balance before finally closing the account and handing over completely to the new supplier. Ofgem's preferred method is that we use an estimated figure to achieve a quicker, closer close, and then if necessary, true up the account after the fact. You may have seen some public commentary from Greg Jackson, who's the Octopus chief executive, which I agree with, that actually we thought that finding was an overreaction and that they aren't necessarily supporting a good outcome for customers. But nonetheless, those are the rules. The Kraken system has now been adjusted to fall into line with that, and that issue is closed. The other issue, which was a bigger one for us, was that at the start of the price cap regime, so in 2019, we introduced a manual process to allow customers to switch between monthly billing and direct debit payment. Direct debit carries a cheaper tariff because it has less issues around bad debt and payment failure in it. However, that was a manual process, not a sort of coded process in the system, and our checks and balances didn't pick up the fact that people requesting to switch between the two weren't actually getting a tariff change coming through. For a long while, that was a relatively small price differential, about £30 a year at typical domestic consumption values. And obviously, in the energy crisis, as prices have gone up, that differential has increased. And in the end, just under 6,000 customers were overcharged by an average of £54 through this period. We obviously, once we noticed the issue, notified Ofgem, fully complied with them and agreed a package of refunds and compensation for customers. That was all included and provided for in the 2022 financial accounts. However, unfortunately, what Ofgem looked for from us was an account of all of our tariffs across 14 regions for every period from the start of 2019. And our data from the period before we moved to the Kraken system was not in a clear and accessible state, and we made errors in reporting that data to Ofgem, which is why they then asked us to settle the issue with a larger payment, because perhaps understandably a regulator needs kind of quick and clear data from suppliers, and on that occasion we weren't able to supply it. What we've done is now to change our data and reporting processes and sign-offs to make sure that doesn't happen again. So we've invested in new roles around reporting data to the regulator. We have a very clear set of internal sign-offs for that data to avoid that issue happening again, and the matter is now closed with the regulator. The last point I would offer is that we are now living through a period of pretty activist energy regulator. There's a supplier in the news headlines today with a £5 million fine over customer service issues last year. It is very hard, frankly, to name a supplier which hasn't now had some sort of intervention from the regulator in the course of the last year. And we've had to invest behind processes and systems to make sure that there are no further issues for us. Rupert, there was a question there, third one, around £4 a share.
Yeah.
As CFO, how are we feeling about that?
Yeah, no, so let me just read the question. So I notice our share value is still well short of the £4 electricity offer, which the board claimed undervalued the company and we turned down. Please comment. So I think I'll start by just saying the board remains confident that the right decision was taken. And I'll just add a few elements of commentary around that. So the first would be that the two analysts that cover the company retain a price target and a buy recommendation in respect to the company, with a price target that is above that £4 level in both cases. When we announced our 2022 results, we were very clear in our presentation and in our discussions with investors that the board believed the share price fundamentally undervalued the company. And we pulled out a couple of reference points, and this is based on where we were at the end of 2022, but the net cash position of the business at the end of 2022, together with our share of the Series A valuation, which was completed in August 2022 of the ZapMap business, those two financial investments effectively alone were greater than, and are still greater than, the market capitalization of the company. I mean, for people who invest in a number of shares, particularly across the AIM market is not a particularly liquid market in some areas, and that can have an impact on share price. And there are a number of factors which are to a significant extent outside the control of an individual company, macro events, general market or sector news that also impact share prices from time to time. The board, I think, sort of reiterates that we'll continue to deliver on our long-term stated strategic goals, which we continue to believe will create positive value for shareholders and other stakeholders in the business.
Thank you, Rupert. There's a couple, 4 and 5, which I might link really, which are asking around whether a B Corp certification is good for the share price and dividends, and whether sustainability and social justice are more important than the share price. I think the thing about B Corp certification is that it's saying that you should be able to do all of those things, and it is not any sort of abrogation of the company from its responsibilities to grow its profitability over time and therefore free itself to invest more behind the services we want to offer. So in no sense is this an attempt to sort of duck an obligation to try and grow the business and value for shareholders. It's just saying that in doing that, we need to be mindful of our impact on people and the planet, which frankly, given Good Energy's underlying business, is something that we should find relatively easy to do. And as I said during the presentation, if anything, the evidence is that B Corps tend to be sort of younger, faster growing businesses. Anything that helps us stick out and have a differentiation in the UK's energy market, I think will be helpful to us as a business, and therefore will have a knock-on effect on our profitability, growth and dividends. The dividend policy, last point, doesn't change, and that is one which we are fundamentally saying that we are looking to invest behind the energy services growth of the company, but we are mindful of the requirement of some of our shareholders for a dividend, and therefore we have been paying a smaller dividend than in our previous non-services vision, but nonetheless we are paying a dividend and would to retain that policy. Rupert, there's one. Can you run company secretary?
Yeah,
so you can take that one.
So I'll summarise the question. So this is a question about 4 of the resolutions at the AGM, so 8 to 11, and the question is a sort of explanation as to what they are, why they're important, and therefore what benefit to the company from shareholders supporting the board's recommendation to vote for them. So as Nigel said earlier when we went through the overall set of resolutions for the AGM, these are standard authorities proposed by the majority of companies across the different exchanges, so from the FTSE 100, FTSE 250, AIM, to their shareholders. These 4 in particular relate to the issue of shares by the company, 8, 9 and 10, and for 11 specifically, the repurchase of shares by the company. And they give directors authority over those actions up to certain limits. The issue of shares typically to fund growth, to fund acquisitions, and it is those resolutions that may be used in those circumstances in order to fund growth or acquisitions and help the business achieve its long-term objectives again and long-term purpose.
Thank you. So 2 more pre-submitted, and then we can come on to anything that's come up during the meeting. So we have a question there drawing our attention to a heat cell proposition. Obviously, whilst there's a lot of agreement on the fact that we need to transform heating away from being a fossil fuel-based technology to a clean fuel-based technology, you will have, I'm sure, be aware that there are contending technologies in this. This is one mentioned by a shareholder here, which is heat cells. Hydrogen occasionally is discussed as another one. Whilst heat pumps will not be appropriate for every home in the UK, they are not a good solution, for example, for flats and apartments. We do think that this is the most accessible technology for most people, which is why we've backed heat pumps in particular. We think that we expect this to be a fast-growing market, running up to a sort of run rate of installs of well over 500,000 a year, for example, as we move through the decade. So I'm sure there will be other technologies, but I think there is increasing body of evidence that for most people, heat pumps, which of course are the norm in, say, quite a lot of the Nordic markets, where after all it's a pretty cold place during the winter, will be the clean fuel heat source that many UK households come to adopt, which is why we are investing behind it as we are. Last one is then Ripple, and will you be able to use your Good Energy account? So for those who are unaware, I think a great and innovative firms of Ripple allow people to buy a stake in the development of usually wind farms. They've moved into solar now as well, and then recoup some of that through a discounted electricity bill. It's something we're aware of and we will continue to look at. We have at the moment just other priorities, which means that right now the answer is you can't. But as this develops, we will keep an eye on it and see where it fits within our development roadmap. So we've got some live questions. Adrian, thank you for your support on the buyback. I was unclear as to its advantage. Just a simple answer to this. So we've got back onto sort of
Yeah, so share buybacks are they aren't that common. There's probably large companies often use them potentially after they have raised money, potentially for growth, and then when they start to sort of pay back significantly, then one of the ways of effectively returning the capital of the organisation back to where it had been previously is to use a share buyback. It's the advantage is essentially to return cash to shareholders at a given point in time, and it can be done for a variety of reasons, but it's not that common. It's more typically used, I'll say, by larger organisations.
So, I mean, it's almost there because it's a market standard resolution that, and some circumstances might mean that we would want that flexibility. We haven't obviously made any public comment that that would be our plan, and it's not actually. If you look at the capital allocation policy we're public with, it's not one of the things we would want to use capital with immediately. Ben there has a sort of a similar flavour of question around the valuation of the company, the amount of cash we've got in the market, and our belief that the market is therefore missing the correct valuation. Is there anything you want to add to that, Rupert, to what you said before?
No, I think please come back if the answer earlier didn't address it, but I think that we've sort of covered most of the points within that.
Obviously we spend quite a lot of time on investor relations matters and continue to try and make sure that there is good investor understanding of the strategy, which eventually, hopefully, will overcome concerns around the sector and the like.
Yeah, I mean, I would just highlight that within the different parts of the business. So we have the energy supply business to homes and businesses. We have our feed-in tariff business, and we have our stake and growth plans associated with energy services. The energy services of the business is currently in growth and investment mode. The feed-in tariff business is relatively mature, and the energy supply business has had a profitable year in 2022. We talked about challenges at the back end of 2021. So those businesses are essentially being valued at nil, which the board again believes is a fundamental mismatch in terms of the potential and performance of those parts of the business.
Thank you. And actually, there's probably a follow-up for you there, Rupert, in terms of debt and what we're seeing. Obviously, we made some comments on that in the interims.
Yeah. So, I think it is fair to say that the government support schemes over the winter did the job that they were intended to do, which was to insulate consumers and businesses from extremely high commodity prices over that period of time. The domestic price support scheme is still in place through Q2, so that's going to be in place until the end of June, and that provides a reduced level of absolute support and therefore substantially keeps prices for domestic consumers the same through Q2. The business support packages have fallen away more significantly, and therefore, whilst the overall commodity market is declining, the net amount that businesses are likely to be paying in Q2 has increased, and therefore it'll be something which we monitor pretty closely as we go through Q3 to see if there is any impact from what has been a much more sudden withdrawal of the support schemes into the particularly the sort of smaller business segment.
Thank you. And then a point from Paul here around the explanation I gave earlier of our recent dealings with Ofgem and whether that was a sort of right sort of tone. You're quite right to pull me up on that, Paul. I think just by way of explanation of the previous answer, the question was quite technical. We'd asked about operational controls failures and therefore what are we doing about it? We have always seen ourselves as an ethically run business, and that hasn't changed, and it was mortifying to many of us for us to have the company's name put in the public light like that. I would reassure everybody on the call that one error was, I suppose, small, which is the account closing issue, and I stand by my criticism of the regulator that they were frankly looking to make over-publicised an issue that was relatively small. The issue around direct debit charging, I think, is much more serious, and we're obviously extremely apologetic for it. I can reassure everybody that it was certainly not done for the company's financial gain, because the reverse was the case. So customers who switched to monthly billing away from direct debit, they didn't see their tariff slightly increase to reflect the increased costs of that. So there were some consumers got a small gain from that. It isn't our intention to do anything other than run a company with high standards and high levels of service, which is why we've actually paid more than the required compensation back to consumers that Ofgem normally requires. And we are investing more in our processes and standards and systems to make sure that these things don't happen again. I would say, as I sort of said earlier, unfortunately, we're in a period where a lot of energy suppliers are in the focus of the regulator, and there was a sort of flow of most, if not all, energy companies being named. I can reassure you also that the overall level of customer service we're achieving, if you measure it by Trustpilot, which is the most sort of robust set of data on this, would suggest that we remain one of the top 2 energy companies in the country in terms of its customers' attitude to the service we are giving them.
Nigel, Rupert, if I may just jump back in there, and thank you very much indeed for addressing all of those questions that came in from investors. And of course, if there are any further questions that do come through, and we'll make these available to you immediately after the presentation has ended, just for you to review, to then add any additional responses, of course, where it's appropriate to do so. And we'll publish all those responses out on the Investor Meet Company platform. But Nigel, perhaps before redirecting those on the call to provide you with their feedback, which I know is particularly important to yourself and the company, if I could please just ask you for a few closing comments to wrap up with, that would be great.
Well, first of all, can I thank investors and shareholders for taking the time to hear this morning's presentation and participate in the way that you have. It's not been a lengthy discussion of our performance this time. We will be back with an update on that in September at the interim results presentation. However, we do think that cementing the company's purpose in its articles is an important signal to all of our stakeholders, be they our customers, our employees, or the wider marketplace. And therefore, we would be grateful for your support as shareholders in doing that. All votes count. So if you have not yet voted, can I please urge you to cast your votes in time for the annual general meeting next week.
Nigel, Rupert, that's great. And thank you once again for updating investors this morning. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This won't take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Good Energy Group PLC, we would like to thank you for attending today's presentation. That now concludes today's session, so good afternoon to you all.